So how do you determine the correct amount of life insurance? Hi, my name is Mark Miller and I'm an independent producer here at Legacy Accounting and Financial Services. And today I want to help you answer that question properly. Now, some people guess at this thing with rules of thumb like 10 times your annual income or twice your net worth. Things that may be a good start, but they really don't explain anything. Others just simply grab a number they think sounds good and they run with it. They never give it any thought. Now, if you want to do this right, it's important to understand why you're getting the insurance in the first place. Knowing or at least having an idea ahead of time of what you want covered, either in the event of your ultimate demise or if you're looking at designing a policy with its living benefits in mind, will help us find the right vehicle to get you where you want to go. This is where an insurance needs calculator comes in handy. Now, here's some food for thought. There is no magic one-size-fits-all to policy design. Needs change over time. And so having a tool that can run variables can be a great help. We have a calculator under the Resources tab at legacyaccountingfinancial.com. Feel free to play with the numbers, and when you're ready to either get some questions answered or sit down and have a conversation, we're ready to help. So let's take a look at this. First on our calculator is medical care. This is a line most people don't really think about, but it's potentially important. There are several life insurance policies available that can combine both life and long-term care needs in one package through either a traditional LTC rider or through critical, chronic, or terminal illness riders, which may work in a similar or perhaps even better way than a standard LTC contract. Now, without getting into the weeds and having a long LTC discussion here in a 6-minute video, let's just consider the actual cost of long-term care. Now, people age 65 or over have a roughly 70% chance of needing some form of extended care over their lifetime. And the average time needed for that care, about 2 to 3 years. Now, currently in Washington State, depending on the type of care that's needed and the severity, those costs can typically range from about $70,000 to $150,000 or more per year. So if you're one of those unfortunate souls who thinks the upcoming Washington Cares Fund and that tax is going to be there to help you, well, as a Dread Private Robert so eloquently put it, you better get used to disappointment. But that can be a whole nother discussion. You can either self-insure that risk with your own retirement funds or other assets until you reach the Medicaid spend-down limits and basically put yourself destitute, or you can pass that burden off to an insurance carrier for pennies on the dollar. That's largely up to you. Now, moving on in regards to just the life insurance, it's important to break the need down into two groups. You're going to have an immediate cash need and an ongoing income need. Now, think of the immediate needs as a stash of money that's set aside to cover time-sensitive items without affecting the ongoing needs that we're going to discuss here in a second. Things like final expenses and any fees associated with funeral costs or settling your affairs. What plans you have in place here can make a difference of thousands of dollars. Then there's the things that, if God forbid something should happen to you, your heirs may need some cash on hand sooner than later. Now, can your spouse survive 6 months without an income? What if the car breaks down or that water heater decides your wife's been hot long enough, man? Perhaps one day the ceiling decides to identify as a sunroof. So having a little emergency cash is going to go a long way towards helping with those goals. Maybe child care, private education, college funding for your spouse or children is important to you. How much do you want set aside so that they can have those things? There's also the home mortgage, personal or business debt, leaving a spouse with 3 maxed out credit cards and a home loan and business obligations can lead them to think maybe unkind, perhaps immoral thoughts towards you. Setting them up to be debt-free is going to go a long ways towards them believing you left as their hero. Now, the next section of the calculator addresses your survivor's ongoing needs. If you're no longer there to provide for your spouse or your children, how much of your present income are they going to need to not take a severe hit to the lifestyle they've grown accustomed to? Now, that's a variable, but most people, it's about 60 to 80% of current income is a good place to start. To sustain that, you're going to need to have enough money in a bucket of funds so that even in a modest rate of return, you will still produce enough income for your beneficiaries without dipping into the principal that's feeding that engine. Now, although you can change it, the calculator on the website defaults to about a 6% rate of return. That's to account for market fluctuations, other downturns, issues. So long term, that's a fairly realistic number. On the flip side, we don't need to overinsure you. So accounting for the additional income sources like surviving spouse's income, retirement proceeds, Social Security, other business income, all of which may still be coming in, that's going to reduce the amount of life insurance needed to cover the gaps. And accounting for all that is going to help balance our overall approach. So while it's not a crystal ball, what you enter in that calculator will help guide you to better understand what is really needed in your absence. And when you're ready, we can look at how this fits into your budget, your overall financial picture, and most importantly, what you qualify for. So for more information or to set up a no-cost, no-obligation appointment, feel free to email me at mark@legacyaccountingfinancial.com or give us a call at 360-597-0400. And with that, thanks, and make it a great day.